Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Monday the 2nd of December. Well, we had a move into the close on Friday. It was a little bit risk negative, but that has completely turned around this morning. We had some really improvement in the China manufacturing PMIs for both official government data and also the CADUSD data, and that has really helped to improve sentiment. And we saw that yields have come, let me find it, there we go, the CADUSD data coming in better than expected and an improvement, and we saw that the impact of that is that moves out of safe havens and back into risk again. Look at gold, $8 lower. Look at treasury yields, sharply higher on the 10-year, over sort of 7 basis points higher there on the 10-year. 2-year less strong high, just 4 basis points higher, but still that's a yield curve steepener, which is a risk positive move there. Equity markets, European equity markets sort of half to 0.7% higher. S&P 500 futures 0.4% higher, so basically unwinding all of Friday's losses there. And oil as well. Oil fell sharply on Friday. There were fears that the US-China trade dispute could sort of scupper the move towards phase one, following on from Donald Trump signing those Hong Kong bills into law. But that sharp move low, about 4% lower on WTI, has rebounded 1.5% today. So nothing like the fall that we saw on Friday, but still unwinding some of that move. But it's really interesting that the improvement that we're seeing through these risk appetite moves. Now, in terms of data points today, it is the first trading day of the month, so focusing is on the manufacturing PMI data. Eurozone PMI actually came out better than expected in the revision on the manufacturing data, so up from 46.6 to 46.9, so it's still very much in contraction territory, but less so than previously. We're waiting out for the UK data at 9:30, and then the US data this afternoon. The ISM manufacturing is expected to improve also, but again back in contraction territory still. So looking out for all of that. Now, my chart today is the Canadian dollar. Now, what we have seen is this Canadian dollar, which has been under pressure for the last month or so, really, as the trend higher has continued. We've seen the dollar performing well, but is that now starting to dissipate? That uptrend that we've seen in the past few weeks has come under pressure as the market has consolidated sideways, and that consolidation sideways has really come as the momentum indicators have started to roll over. You can see that through the MACD line starting to tail off. You've seen the stochastics falling over. RSI back around 60. So this is sort of a key pivot moment, really, because if you sort of zoom out, you can see that this band between 133 and 133.50 has been often a key turning point throughout 2019, really. And we can see that the market rallied up to 33 big figure, and just every time it hit that point, it started to fall back last week. So we're still seeing that again into Friday. Negative candle on Friday, a little tick higher today, but to be honest, I think this is an uptrend that could well start to come under pressure. You can see that on the hourly chart, there's more of a consolidation move rather than that former strong momentum move that we saw back a couple of weeks ago. So this uptrend recovery again is starting to dissipate, starting to falter around that key pivot area, 33 big figure to 33.50. So that could well be a point at which that rally, as it did in July, August and September, October, starts to dissipate, fall over and retreat back towards that 30 big figure mark. So that certainly looks as though that we could be in line for a key moment there. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.